And hello, everyone. Welcome to the Real Estate Show here on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, in the house with you today. And thanks for joining us today as the month of June rolls along here. And Southern Oregon's real estate market just continues to be pretty darn robust. Low, Joe, in certain categories, price categories, it's the available inventory is very low, and so there's still a lot of activity going on. But everybody always says, what are interest rates going to do? They're going to change the market, aren't they?
They're going to change the game. They do a lot of times, yeah.
Something's going to happen with that. So anyway, here in the house today, Guy Giles, who's our resident mortgage expert from Bank 34 Mortgages here. First of all, how are you doing?
Oh man, I'm good. Ready to go.
I think last time we talked with you, you were heading out somewhere, weren't you? You going somewhere? Where'd you go?
We flew down to Texas to see a concert and then headed over to Nashville for a few days. So food's there is really good. 7 pounds, I think, is what I gained while I was gone. So
I don't blame you. That's pretty good.
It was good.
Tell our viewers and our listeners, first of all, kind of mortgage interest rates. People talk about them all the time. You read about it. You read the Fed raising this, doing this. What are rates really doing?
Well, really, they've just been flat. So we're, depending on whether or not you want to pay points, I mean, it doesn't really hurt to look at it. We didn't do it for a long time. The best pricing seemed to be not really paying any points. At this point, it's, really comes down to your goals, how long you're going to be in the house. Does it make sense? And if you're planning on staying there for a little while, you might entertain the thought. All the online guys that seem to have the really good rates, just on the computer, they're all charging points, whether you see it up front or you don't, and that's kind of how they get there. We're all kind of selling the same product. We have good rates comparable with other people, but it's just all about your goals. It might not be the lowest rate if you're going to just be in your house for a couple of years, let it appreciate. Maybe you don't want to pay, buy your rate way down, or maybe you just want to even take a little bit of a rebate.
As interest rates have inched upwards, is it become more competitive in your business line with other lenders? I mean, are you? We're going to talk about a Chenoa Fund. I know you really want to talk about here, but has it become more competitive among you as interest rates go up because the pool of buyers shrinks? Remember, every 1% that interest rates go up, 10% of the buyer pool disappears. Yeah. So that's why it's significant. So what do you see?
Well, we've always been really competitive on our rates. So I don't really, if I'm going up against anybody around here, I don't usually have too much of a trouble. But yeah, I mean, everybody's just trying to stay just a little bit ahead of the next guy, whether it's, I'll close one in 30 days and the next guy's like, I'll close one in 28 days. It's kind of like name that tune.
Or I'll guarantee I'll close this in so many days. That never works.
Yeah. So, I mean, really it's just about getting appraisal back. And they're actually not too backed up right now. We started asking them for sooner close dates, and they've been really happy to accommodate us, not overcharging us for that either.
Yeah. And that rate for 30-year fixed mortgages, what's the range that you're doing this week? Latest.
Truthfully, if your credit sucks, you're going to be in the low fives, the low to mid fives.
And what does credit sucking mean to you? What is that number? What is that number?
Look, like under 700. I mean, and then if you have like a 780 credit score, then there's a couple of the banks that I deal with that really, really like that, and then they'll give you a little bit of a bargain for that. But there's something for everybody. Whether if your credit score is not great, maybe we're looking at an FHA loan or something, or if it's in real good shape, depending on your down payment. But I locked a couple in the 4s today. Locked one in the 5. I think I locked 3 or 4 today.
Wow! But
it's one of those things that it's a case by case basis. But if you can safely say mid-high 4s, low 5s.
And I heard this several times just in this week, locking the rate in, okay? Yeah. Why is that so important that people should pay attention to that?
Well, it kind of buffers you from things going up. Like right now we're in a really tight spread right now as far as where the bonds and everything are trading and the securities. So it could kind of break out either way. They're going to probably be able to explain, down to the nitty-gritty better than me, but it's basically like an 80-20 almost, but not really.
So if I came to you, the Chenoa Fund is one of many different available things that you have to get match people up with the right loan.
Tools in the toolbox.
And it's just one that got kind of updated recently on the 3% down, so I'd thought it'd be worth it to
reintroduce our guests if we would.
Well, I was going to say, Shawn King, are you guys there, by the way?
We're here. Can you hear us? I got Matt Pettit with me. He's the National Program Director
Okay.
And of course, I handle Northwest Territories.
You handle
welcome, guys.
Yeah, welcome. Thank you for spending some time with us. Okay, back before Joe and I became brokers, we all went through that Great Recession, and we always heard of these stories, 100% financing. It was the cause of the Great Recession, but these have come back, and they're different now today, aren't they, fellas?
So right, we work with conventional conforming loans. We also work with FHA loans, and as you know, FHA requires that you have a W-2, that you have a job, you have some specific minimum requirements to qualify. And so it's not like you're just fogging up a mirror to get one of these programs. You actually have to qualify. And then we offer a second mortgage through a government entity, and that government entity is the Cedar Creek Paiute tribe, and that's a government entity that can offer a legitimate second mortgage on an FHA.
Okay, explain that. You need to explain that to me because I have a funny look on my face. So what does that actually mean? I'm following that.
So, as you know, there's government entities like a city, a county,
okay,
a municipality. They can all offer mortgages. They can have bond programs, and they can offer mortgages on FHA. And there's a couple of different places you can do that with FHA. But one of the specific ones where you're able to offer a second mortgage at 3.5% is through a government entity, and an Indian tribe is a sovereign government entity. And the only difference between us and all these local programs is we are nationally chartered. So we work in every state except for New York.
That is interesting.
So we're nationally chartered.
That's interesting.
Well, it's cool.
So if I want to come, okay, how am I going to qualify? Tell me about the loans then, Shawn, that you guys have that you offer. Or how do they work? I guess
who's this going to help, and who's this going to benefit to take advantage of this?
When am I going to call Guy and say I want that loan that you just
or we have a client.
We have a client that says that. Yeah.
So, Guy, I think you might be able to speak to this a little bit. You have clients that they have the ability to pay a mortgage payment. They've got a good credit history, but they just haven't been able to save up enough for a down payment.
Right.
And my question for a lot of people is, if there is a downturn, you've saved up $7,000, we'll say, on a $200,000 house, 3.5% down payment. You save up $7,000 and scrimp and save, and you put that in your down payment. And then let's say like we have a little downturn, and you lose your job.
Ooh.
And let's say like the market goes a little bit backwards. That 3% is going to get eaten up really quickly on a down payment. So wouldn't you rather have that $7,000 in the bank so you can cover a few mortgage payments? You probably would. If you lost your job, that'd be a better situation for you. It'd be a more conservative option for you.
And that second,
it's that guy that's saved up or that's trying to save up. He can afford it, and he just needs that little extra bit of help. We come in. He absolutely qualifies for an FHA mortgage, and we write a second mortgage.
So you write
second, so he can keep that money in his pocket.
So it's the second mortgage that is written that creates the 100% financing. Is that right?
Correct. Yeah, and it's 3.5%.
So that's I didn't know how that worked. I've never used that before.
I've also had people that were kind of preparing to buy a house, and they ended up paying off their car, paying off their credit card, paying off a few different things, and it actually gave them a little bit bigger bang for their buck to go this route rather than have a car payment in the background. And they actually their debts actually went down. I'm looking at one of those today where it might make more sense for her to pay off her car rather than come in with a whole down payment. So,
mortgage debt's the cheapest debt there is, right? And so it makes sense if you have a credit card where you're paying 15, 20, 30% interest on a credit card. Why not get rid of that debt, retire that with your money rather than putting it down if you have an option to do mortgage debt.
Oh, absolutely. I mean, we talk about that all the time. It's saving your money, and I agree with that. That's an option there.
And definitely the big difference, though, in 2006 and right now, though, is kind of we touched on it a little bit, but we're fully qualifying people right now. Either they qualify or they don't. So it's not like a fog mirror, like he was saying, or a co-fogger from what I saw back then.
So the people that you're qualifying for these loans, and Shawn and Mike, you guys are saying this too. Then they're fully qualified here. It's not like it was back before, where people could just walk in and get a loan. So you're actually qualifying them, and that's that happening everywhere. You think?
Are you talking about this program? I haven't seen it anywhere else in the valley. Okay. I understood that there might be one other group doing it, but
and are people taking advantage of this?
You know,
we're not aware of any other national programs that are out there that are nationally chartered. There's local municipality programs, but as far as qualifications go, you're looking at a minimum credit score of 620.
Of 620.
No one below that is going to qualify for our program. And then they've got to have income. They've got to meet income requirements, different things. They've got to have a job. Again, it's not this no income, no asset stuff that used to pollute the market from the olden days. This is something that it's a full-on loan, and we just have this wonderful opportunity for people that need some help.
And I've had opportunity to work with first-time home buyers who are so excited to get in that first home, but it's taken every bit
that
of
cash
they can scrape, exactly as you're saying, Shawn, that they bring everything they have to the table, and they almost go broke in their reserves to buy the house. But you need that money in reserve, especially if you're buying a house that maybe is in that first-time buyer's range where there might be a little maintenance to take care of and some things like that. Boy, I think I'm excited to hear that option might be out there, is where you don't have to deplete everything in your hard-earned resources that you've saved up to be able to get into a house and get started.
Mm-hmm. So
absolutely. You got lawnmowers, washer and dryer, window treatments, all those things.
I'm doing the math in my head.
Homeowners they have to pick up. So it makes sense not to put those on a credit card.
Absolutely.
Now to qualify, we got a break coming up here, fellows, and I want you to stay with us here, but. I'm curious as to whether does this increase the cost for the borrower a great deal by doing this?
How does that pay?
Because if I'm hearing you got the FHA loan and then you've got the second loan on it also. So does it raise the rate for buyers in this type of situation?
It doesn't raise the price at all of the home. You have a 3.5% on FHA with or without us.
Right.
So with our 3.5% second mortgage, it doesn't raise the overall price of the home at all. The interest rate may be a little bit higher just depending on the credit score of the borrower and some other factors, but we're not talking crazy. We're talking maybe half a point off.
Well, and if you decided to do like we were talking to, if you decided to do like we were talking about a minute ago, maybe run some credit scenarios. If you could help your credit score by paying down a credit card or doing something, that might just be the difference that you would have had to pay anyway with the higher, with the lower FICO score.
Paying down debt, no matter what, is a good thing, and that's it makes an enormous difference in a loan, doesn't it?
By
lowering
that interest,
and lowering those rates. We got a break coming up here. We're talking mortgage interest rates and 100% financing today. It's interesting how they work. That I did not know. I was wondering how that worked, and today we've learned that. And Guy's right in the middle of all that as well. So that's some of the programs that he's got. We got a break coming up here. The Real Estate Show. Don't forget, you can check out any of our past shows at realestateshoworegon.com. We are coming right back to KCMX right after this. And welcome back to the Real Estate Show on KCMX News Media 880. Pete Belcaster and Joe Brett, the Real Estate Guys, with you today at mid-June time here, along with Guy Giles, our resident mortgage expert from Bank 34 Mortgage. He's always, his business is just amazing, isn't it? I mean, Guy has really done an awful lot. We've watched you now. How many years have you been with us for? Like four or 5 years now?
Probably at least that long. I still remember our first show was a live one. That scared the heck out of me. But
and now, of course, we're on YouTube.
We knew when you came back you'd be a good one.
Oh my gosh.
We're on YouTube right now, of course, with Wells Radio. So just quickly before we go back to our guest, by the way, who was Shawn King and Mike Pettit from the Chenoa Fund, and we're talking financing, 100% financing on this particular loan. But just tell people, Guy, how's business with you right now? Tell me what's going on there.
I'm still busy. I'm about 20. I think I did some math yesterday. About 28% above where I was last year.
Wow, that's good. Jeez.
Yeah, it just every time I get done with a really good year, and I think I can't do any better than that. It just gets better.
And again, buyers and sellers, they're coming from all over. Just kind of give people that perception of what's happening with that.
Pretty much people moving from all over. I've had calls everywhere from Florida today, Texas today, New York, Key West.
Jeez,
and,
really?
And probably one or two from California, but just
that's amazing.
All over the place. Everybody's just still coming here. Some people that had an experience in Portland years ago and then realized that it doesn't rain like that everywhere in the state. Or, I was one of the ladies from Key West that's coming this direction, but it's all purchase money. I have two
purchasing money. Yeah, they're buying.
I think out of the 19 loans that I have going right now, there's one refinance in there.
Wow. Lennox Scott, who's the CEO of John L. Scott, was in town. He'll be on our show in a couple of weeks. He was saying about how the Chinese and how that market in San Francisco and Seattle have just begun to it will filter down to us in this market here. They're buying not as big as they used to because the Chinese government won't let you take as much money out, but they're still buying and they're coming, and this type of thing is changing the West Coast market still. And but for in our case, for most of us here, we want to get it. And Portland is just totally went over the
There's
the
no
cliff,
direct
by the way.
flights from China.
There's no direct flights from China. You heard that. That's why Portland is such a. They say basically Portland right now is of all the major urban areas in the West Coast, Portland is the most affordable. Can you believe that?
That's just a ridiculous statement, right? I mean, who
can't
can
imagine that.
believe that? We've been reading it the last 2 years.
Okay, so let's get back here. I want to hear more about this Chenoa Fund, 100% financing. I want to make sure. So we're with, again, Shawn King and Mike Pettit are with us on the phone today. So, fellas, how do I qualify for a loan like this, or what do I do? What's the qualifications in order to do this?
Well, yeah, Guy, I think you can probably chime in on this, whether it's FHA or whether it's conventional. But obviously, I have a credit score requirement. The lowest that we'll go is 620.
Okay.
And then our top tier borrowers that get obviously the best interest rates are going to be around the 680. And so
680, okay.
680 is a sweet spot to where everyone will basically not only qualify, but they get premium interest rates.
Excellent.
So you can qualify at 620, and you have to have a job. You have to be able to show income. And you can't. In some cases, you can't be over certain amounts of income, and in other cases, it doesn't matter.
Is there?
So it just depends on what the program is.
Is there a limit on the big? I guess the size of my place. Can I buy a luxury home like this, or is there certain types of homes that you will not fund?
What you're kind of going to be limited to is
according to FHA guidelines.
Oh, it's I'm sorry, it's FHA guideline. Okay.
And as far as the qualifications, if you get a DU or a desktop underwriter approval, and what we do is we take the second mortgage piece of the thing and we hit them with that debt. So it's basically a little bit over what the actual rate is, and it's amortized over 10 years. And you just hit them with that debt, just like it was a car payment or something like that. And as long as it still fits in with the debt to income ratios, you're good to go. So again, it's not some crazy spin-off thing that we're
Now for a while when we first started doing our show, fellows, back in 2009. FHA was the lender of choice. I mean, there wasn't much else out there. USDA, and there was no conventional loans. Now, if we fast forward to today, that's reversed, and a lot of people are not using FHA, right? I mean, you've even said that, right?
Yeah, it just depends. If your credit is really poor, like say you have a 5, because I can go down pretty low on FICO scores. I try to work with somebody and get their credit score up a little bit, because if I can get them the best deal, I don't want them to wait forever, because I don't want them to get priced out as things are appreciating around here. But if we can get them a little bit better score, they will do better in the long run. But it really depends. If you have 3 to 5% down, and we can fit you into one of these, there's some no income limits in the valley where it doesn't really matter what you make. You can buy a house in East Medford under this program, and or with just 3% down. And if you have a down payment, I mean, I'm not discouraging anybody that has a down payment not to do it, but there are legitimate reasons for this program, and I've used it a few times. And it's like a reverse mortgage. I have a couple of those going. They're not my favorite, but in certain circumstances, they're a great deal. Right. So it's just a matter of sitting down with each person, talking and finding out what their goals are, finding out what's best for them. Because if it is best for them to save a little bit, then I'm going to really try to get them to go that direction.
Yeah. Yeah, but and Mike and Shawn, are you guys doing a lot of these loans? I mean, tell me where they're kind of heading in certain areas, or just kind of where that is going with this.
We have a pretty good amount in every state. It's just the program is still fairly young. We've had about a year, I would say 18 months, where it's really started to go, and it's been fairly consistent on our growth. But it's solid. In terms of capital, mortgage wise, we have capital that we can handle any volume in the long term. So we feel pretty confident about that.
Yeah, you're still going to have to pay the borrower is still going to have to pay the closing costs, correct, on this loan, right?
Yeah, it doesn't subsidize that at all.
So we're really just you're talking about the down payment part of this, which can be. Well, I had to buy 20. Remember, I had to buy my house. I had to pay 20% down. Remember that was a long time ago. So, how far that's come today. So, but you have to be able to do that in order to.
One interesting point here, guys, is that on the Home Ready 97 conforming product that we have, that works with a conventional, we do a 3.5% on that also, and that only requires a 3% down payment. So that 0.5% can be used for closing costs. Or whatnot on the loan. So there is a little bit of closing cost assistance that we would call it that comes with a conventional, and that's a 680 credit score on that one.
And on that program, it is really designed as a first-time home buyer. The mortgage insurance is a little bit cheaper on it than it is on a regular one. The rates are a little bit lower on that program also in a lot of ways.
And if I was a first-time home buyer, I could do the 100% Chenoa Fund loan on that if I FHA qualified to do that.
Yes.
I wonder if that's even. It sounds like a better deal than what we hear about first time home buyers. I mean, this might be the better deal.
I sure think of every situation is unique and every set of buyers is unique, and what a nice option to have out there to maybe bridge that gap and get into the home.
What is the what is the FHA limit right now in Jackson, Josephine counties? Do you remember?
It's like 302. The exact number. I'm more focused on right at about 310 as the purchase price with 3.5% down. So I lost that one. But it's right at $300,000. I think 301,000.
Yeah. Okay. So that's the loan limit there that FHA will go.
Yeah, and also the median. Fannie Mae's coming out with an update, I think, any day now. I have it in my calendar when it's popping up, but they're actually going to be changing the median income for around here also. So that'll change a few of the programs.
Is it going up?
Qualify for, is it going up? Yes.
Yeah. Well, see, all that's going up because if you looked in the latest MLS stats, the affordability index has come down, because of what we're seeing, and that's nervy.
And guys, where's the Paiute Nation? Where are they located? Because Pete and I grew up in Klamath Falls and have tribal friends over there, and this is an interesting endeavor on the tribe's part. Yeah. Insofar as
it beats gambling, it beats opening another
exactly
casino.
My thought.
That's
exactly
my thought. Yeah.
Yeah, they're out of southern Utah.
Southern Utah.
Right. Excellent.
Well, and I'm going to assume because that the default rates on these are pretty low from people. It's kind of like USDA, which is like a low default rate.
Right. Yes. So we have a good, a healthy default, a non-default rate, I guess is a better way to say it.
Yeah.
And we make sure that any lender that we work with, we bring on board, they meet a certain criteria with what's called Neighborhood Watch, and that's the HUD guideline or the HUD monitoring apparatus for saying what defaults are. So we make sure that they're under a certain default rate before they come on board with us.
That's a fascinating type of
great program.
We're kind of going into your world, Guy.
Oh yeah,
we're going deep into the bowels of the lending industry here, aren't we? Finding these kind of programs.
It's a little prettier down in the bowels this time than it was a few years ago.
Yeah. Well, it's good to hear that's happening.
It's helping people. I think that's the bottom line.
Shawn, Mike, what else can you say? We got a break coming up here in a little bit. We want to let you go, but anything else you want to add to us today? Go right ahead.
Well, we'd be happy to help as many people as we can. We think Guy is a great person to talk to about this program. We're excited to be able to help everyone in Oregon. And obviously, all the other northwestern states, we can handle anybody in those states as well, Idaho, Washington. And I want to just take a quick second and really differentiate between us and the old down payment assistance subprime that happened during the crash.
Go ahead.
And the big thing is they had an 80-20. They had 80-20 loans, and those 20% subprime mortgages, you'd have people with credit scores as low as 520, 540. They wouldn't have to, show any assets. They wouldn't have to prove their income. They could basically get on. And they called them liars loans. They could get on and they could lie about their income.
Liars loans.
And nobody would ever verify that. Nobody would verify any of the assets that they had. And so this is something that's just very different. It's much more conservative than that previous group. And we just don't want to be associated with the crash that happened before.
Sure.
That isn't the same kind of freewheeling mentality that those guys had.
No,
what we have is FHA loans that have been around since 1934. They're a solid product. It's a product that was designed to help ensure that mortgage lenders get repaid, and they have an insurance pool. The insurance pool is the only part of the federal government that runs on a surplus, from our understanding. So they actually have a surplus, and that's good for the insurance pool because when there is a downturn, they can cover those lenders that are having defaults and foreclosures. And so that allows them to offer these mortgages to lower tier borrowers, and so that's something that differentiates us from everyone else that did these things back in 2008, 9, And
That's so good to know, because we are still helping people get back on their feet that kind of got caught up in that and paid the price.
Right.
Yeah.
It's been a long, hard road for them. We don't want to see them go that road again.
Let me ask you boys this question too, because this is something that Lennox Scott said, and you'll hear him in a couple of weeks when he was down, is that he thought in the next 5 years, buyers are either going to be, they're going to be cash buyers, or they're going to have to be fully approved, and that was the word he used, fully approved loan. Is that something that do you guys agree with that? That's where it's going. In other words, you can't. I'm sorry. Go ahead.
Well, I think the trend is right now that really kind of scares me, and I love the idea that we're in an appreciating market. I think that's wonderful. I love that home values are strong, the market's strong, interest rates are low. I think it's good. It's great. But what I'm worried about is that these house prices will outstrip the median income. That's what I'm really worried about. So you've got a 3.2 that's going for something that the average person just can't afford. And I think that when that happens, there has to be a correction, and that makes me worried. And so I'm not trying to be a doom and gloom guy, but that makes me worried. And so if I'm in that situation and I'm about ready to buy a house, I would rather have cash in my pocket than giving that away in the form of a down payment, because the reason people lose their mortgages or lose their homes is because of job loss, divorce, and illness. That's the three reasons, the three top reasons to go default and foreclose.
Right.
And if you have, $7,000 sitting in the bank, you can pay a few mortgage payments while you find a new job, or you get through whatever situation you're in.
I'd rather keep my money as much as I can. Hey, Shawn and Mike, thank you very much for great stuff. I mean, we really learned a lot. So come back again, and we'll do it. We'll do it again. Okay.
Thanks very much for having us on, guys. We appreciate it.
Okay, all right. Thank you for that. That's interesting stuff. We've got a break coming up here. One more segment to go. The Real Estate Show returns to KCMX after this. And welcome back to the Real Estate Show here on KCMX News Media 880. Pete Belcaster and Joe Brett, the real estate guys, with you. Thanks for joining us today. Hey, the 4th of July is coming up, so hope you're making plans. It's in the middle of the week, though. It's the worst day of the week to have the 4th of July. It's like a Wednesday. Anyway, we hope you're going to make some plans there as well. And what's that? I'm sorry.
There's never a bad day to celebrate our independence.
No, absolutely no. This is a Wednesday, though. I wish it was like a weekend.
I'm more concerned with Thursday because I am going to celebrate our independence.
That's the way it is.
You know how we do that.
We're standing here with Guy Giles, Bank 34 Mortgage. He's been with us for a number of years here. We talk mortgage interest rates. That was really so. An Indian nation, a Native American nation, basically takes the difference, right, from the FHA loan and gives you the same percent, the same interest rate as the FHA loan, correct? And so it doesn't raise that much, but it pays for the whole thing, and you keep your down payment. But I've never heard of a Native American tribe doing that. That's the interesting part that I thought. That's a smart investment by it.
Well, that's the thing. It kind of helps everybody. I mean, it makes sense. People get into a house, the tribe gets to make a little bit of money. I mean, I kind of look at the judge things. Do they make sense? Did it ever make sense for us to do a stated loan for a W-2 employee? That never really needed to happen back then. But this, it's you're going to have some of the same benefit, but without some of the ridiculous lending.
And have you funded some of those loans?
I have.
You have. You funded them. Well, I can see for some people that's a perfect way to do it. I mean, it really is. And just remember, too, you can still, even if you qualify for an FHA loan, get 100% financing like that, in your first-time home buyer, you can still qualify for the Rogue Valley Association of Realtors for a down payment and closing cost assistance as well.
Closing cost help.
You really opportunities exist out there, but you gotta have a realtor who knows how to help you get there, and a lender to know how to get you to those things that you want. Anyway,
and I have nothing against gambling. I'm terrible at it and just get my rear kicked long ago when I even tried it out. But I love the fact that they're investing in. The Paiute tribe is investing in people getting into homes because we know what that does for their future and for their future wealth.
That's true. That's true.
There's not a substitute for a good down payment. I don't want to say don't do a down payment. I mean, if you can get a gift from a family member, you can still use that as a down payment. There's or if you save one, there's nothing wrong with doing that either. So.
I would think that the downside to that loan that we talked about is that, correct me if I'm wrong, but because it's an FHA loan, you're going to have You're going to have the mortgage interest. I'm sorry, the
mortgage insurance.
The mortgage insurance for the entire length of the loan. Correct.
Well, and that's what makes the conventional version of this really attractive.
So you can do it as a conventional also. Okay.
Yes.
It just wasn't. I thought he said you just had to be an FHA loan first.
Nope. No.
Okay.
And
Got to be able to qualify for that.
yeah.
So Joe, you could qualify for something like that then. I mean, in the future, if you did that, right?
Yeah.
Yeah, and basically you know they did make it a first time homebuyers program, but if you sell your house, then you kind of qualify as a first time homebuyer again. So I don't know. I don't look a gift horse in the mouth, I guess, on that one.
Right.
But
Well, I guess the bottom line is that there are options out there for borrowers. I mean, I think sometimes we just get stuck in thinking,
I can't get in the game.
I can't get in the game, or I can't qualify, even though you may even know that.
Even
But
though you haven't been listening
Yeah.
to the real estate show or
Right.
talking to a realtor
yeah.
or professional.
But the bottom
like
line,
Guy.
Stowe, is that I think the fully approved thing is coming. I mean, I
Oh.
really think that's coming.
I've been encouraging people like that today. I have a couple school teachers that finally got done with school, so they applied on with me today. I'm collecting all their documentation. I'm looking at everything, and that is our goal, is to have people fully credit approved when they go out and shop for a house. Anything
Yeah.
to differentiate you from somebody else.
And if you're a seller in this particular area, and I think this is coming, no question that if you come in with a loan that is not fully approved versus a multiple offer situation, especially in so many price categories, that's going to be the I guess whatever you call it, but that's going to be the future there.
Differentiator.
Fully approved now.
Well,
I mean, you're fully approved.
That and if you're just kind of moving up in house or moving around or downsizing, and you own a house that's in Oregon here, I have that other program that kind of acts. It's not really a bridge loan, but it's basically I would encumber both properties, and you're writing a non-contingent offer. You don't have to sell your house in order to get this new loan. So
Yeah.
it's kind of a cool way, because there's nothing worse. I'm in the middle of one right now where a guy's selling his house down in California, and he's in contract, but the guy that is buying his house, something could fall through on his,
Yeah.
and then that's just a huge domino.
And that happens.
And you can't blame people, and that's why I like to have people work with a good real estate agent too, because you got to have somebody that's going to vet these things out. Who would think as a first time home buyer to ask all those questions?
Yeah,
they don't.
Or
Well, I had clients. I mean, we did that same thing where we had the property, we live in one, and it's on the market. We haven't been able to sell it, and they found the one that they wanted after looking a long time, and we were able to get the loan without contingent on the other side because the seller wasn't going to do it.
Right. Yeah.
So they have to range enough, whatever, to be able to do that without the contingent
Yeah,
offer. Because
and-
many times contingent offers, and you're going to lose it because you just the
Stuff
sellers.
happens.
well,
That's
yeah,
right. Stuff it does.
and if you didn't want to get in such a big rush to get out of your house, I mean,
Right,
you could go
right.
and you could just do them both, and then you're not going to have a huge payment forever. You're basically just still have your mortgage payment plus whatever your down payment is,
Yeah.
on the other one. But it's
Yeah.
a great program.
It could relieve a lot of seller psychoses, though, of the
Oh.
pressure that you feel when you're in between or waiting for another. Your deal is dependent on another deal. Boy, that is a stressful
Well,
situation.
I
intense
went
situation.
through that. I mean, I
Yeah.
sold my house, and I had another place to go,
She
and
has
I'm
three
telling you that whole
yeah.
process was nerve wracking,
Yeah.
and I haven't even moved yet, and I have my estate sales coming up still. I haven't even got there yet, but I'm telling you,
for me, I'm just your business partner.
it was crazy. I mean, the emotions and the things that you're going back and forth, and in the lend. Anyway, it was crazy, and I'm still not done with it. I got some.
business 10 years.
I'm going to write a book on this. I'm going to write a real estate book on this. It's pretty interesting stuff out of this. Okay, you're busy. That's good to hear. People are
Yes.
coming. We got opportunities for loans.
Options
Again,
out
it comes
there.
always back. If you really want to do it, if you really want to do this, and you've got a decent credit score, because that's the key to it, and you have a job and kinds of things, there's no reason you should not be buying, because you
know
know
what?
rents are higher. You're losing that money.
I have some really good statistics on the cost of waiting, basically. So I think
Yeah.
we can probably go over some of that stuff in the next time pretty well. But just the appreciation. I mean, you're basically,
Right.
things went up. I think in the country over 6% right now is what they're
Yeah.
doing. Believe it or not, and they're it's slowing down a little bit. I think it was 6.7 last month, and I mean it's slowing down a
Yeah.
little bit, but it's crazy. And if you wait. and the rates go up, and the house appreciates, and
job growth in your area also accelerates housing. That's what happened in Portland. The job growth slowed, thus the market slowed.
Right.
And we're not there yet. We're still in the job growth, but corrections are coming. There is no question. You can't go.
No, I agree.
You can't go.
Rising
values and keep rising values and doing that. So, and sellers need to be. Anyway, it's quite a market.
Portland is the most affordable market on the West Coast. That is a true fact.
Only because there's no direct flight to China. That's
I just
exactly
want to shake
right.
my ears when I hear it, though.
All right. Well, hey, you can get a hold of Guy Giles, by the way. You can Google him at anytime on Google, obviously, or Guy.G at bank34.com, right?
That's it.
It's good to hear you're
Start
busy.
right here, get yourself squared away, and then we'll find a realtor for you and get
He can
going.
help you.
That's good. Call one of these guys. They're
Interesting show today. I learned a lot.
stuff,
I always like that. That'll do it for the real estate show here for June 23rd for Pete and Joe and Guy as well. Have a great week, everybody. We'll see you next Saturday. With Glenn Cunningham will be here. We hope you join us then. Don't forget, check out realestateshowOregon.com, our website, for all of our past shows. We'll see you next week. God bless you all.